Perfect, guys. I've decided to make this video to give some guidance on how to use the levels, on what the concept is behind these strings that we use. Okay, let's start. I just took yesterday's chart, plotted the levels from yesterday. This is the Nasdaq. Okay, these levels give us a market structure that frames the price within certain parameters within which the price moves. All the levels we see, which are provided in my string, can obviously act as support and resistance. The nomenclature is different because I believe the HW level is the most important one and serves as a reference to establish the day's bias. When we work below it, there is a greater tendency for a downward trend, while when we work above it, the tendency is more upward. However, this obviously also involves some initial obstacles that can sometimes be RD0 or SD0 or RD1 or SD1, depending a bit on the volatility of that day, on how the day has arrived, in short, on what type of day it is, because the market, as we know, always moves in phases of expansions and contractions. So unless we are in periods of particular volatility, like the one we are experiencing in recent days, movements are observed. So when we witness a day of +3 or +4, the next day the market usually takes a pause, retraces a little, then maybe returns to retest, maybe even makes new highs. But this is the movement that the price always has, these behaviors. So after an expansion phase, contraction phases follow, or consolidation, let's call them what we want. That said, let's return to the levels. So this first area is the one we identify a bit as the main one. Obviously, everything must be fitted together by also referring to what happens on the broader time frame, because this is a 5-minute chart. True, I do intraday trading, so I work on the 5-minute chart, but obviously I need to know the context in which I am moving, so also on a weekly level. That's why I believe it's important to have the weekly levels, which are available on Patreon for premium members, not only for the weekly levels, but also for the very, very, very valid BC3 indicator that helps us frame the day a bit. And I show you how to use them. This is the BC3 indicator with the levels of the previous day. So as I showed you in the other videos for the indicators, how to set it, you see these 4 lines, which I have colored in yellow with this straw yellow. Okay. From here, more or less, the market closes. These are the last market trades. Then here is the closure, the reopening at midnight. The Asian session starts, which I have colored here in red. We see how it is contained. It worked a little above the BC3 closing level. Then it went to test the opening one. Okay, it returned above, retested from below the closing level. Then it went down, did not find strength, and then went down, broke the level that then returned to test, then went down. In the meantime, we had moved to the European session. Okay, then we arrive at the American session and the price started to rise again. After we see, of course, you have all the levels here to monitor, because we know that we said this is the range area. So here there was a first break that then corresponded to SD1, also to the lows recorded the day before probably. Okay, so this is how to frame the session. It makes us understand that maybe during the entire European session, especially, the market slipped down. And so we could accompany it because we saw how it went to test. It did not manage to re-enter the BC3 level range of the previous day and went down. In the next slide, we will see, here you see, these additional BC3 lines, which are practically the BC3 levels. They are the previous chart with the addition of the BC3 of the day, so of the 21st. You know, I always say to show how in short, in shown how to show them in. Plus, I obviously added the BC3 daily range in this one. Okay. Wait for me to set the pointer, which is this one we see here in red. Okay. Which essentially delimits the BG3 daily, except for the initial opening dip where it went slightly below. It regained strength to re-enter the range. It entered, retested it exactly. Meanwhile, this was a level that had already been created, so we had it on the chart. It retested from the alpha, started, returned to retest it, started again, re-entered the range, okay, of the previous day, where it worked, stayed a little while, moving up and down a bit within the range to decide near the HV level. After that, it found strength and volumes to pass the level, and then, well, the market closed. But if there had been time, it probably would have gone to retest these levels up here. So this is essentially how to use the BC3 level with the string levels. These BC3 levels help us further delimit the opening range. Then, of course, there will be days when these levels will be completely surpassed downwards and upwards, as perhaps happened in previous days where the directionality was very broad and very decisive. There you go. So these levels indicate that there is directionality. So maybe if I've reached a downward point, I start working on shorts. Let's move on to the next slide, and to show you how to fit everything together, how I intend the market structure to be built. I have a chart, always this one, in short, a slide with some data that I had prepared, which I am now presenting again because I never had time to complete it. Today I felt in the mood, so I am making this the third video I am doing, and then that's it. Obviously joking. Logically, I enjoy doing them. Otherwise, I wouldn't do it. So, as we were saying, this is the chart with the weekly levels from some time ago. This is the ES, so the Standard and Poor's future with the weekly levels. Okay. And it helps us to frame what the limits of the week might be. What we see here in green is what can be the initial range of the week, which makes us understand that we can move up and down here. Maybe in a week where there are no particular macro data expected, the price might move within an initial weekly range. Or maybe if it's a week that immediately becomes directional, it could also break it upwards right away. It's a first idea to have these levels between R1 and S1 weekly. Obviously to have, well, a parameter within which to have a first idea where the week might then take a direction. Let's go to the next slide where I show you a little bit of the weekly market structure as I see it. So in this area here, I consider it the initial range. Obviously, if we break it upwards, we will have a first directional area that indicates that, well, the price during the week, and in this case, because we are talking about weekly levels, it is taking a direction. And then they arrived on WikiLeaks R2. Probably that piece might be rejected, then it comes back to retest. In short, the usual price movements that we know very well how they work with the concept of testing. So something to aim for the breakout to be able to enter for those who don't know if they can. They can, in short, possibly get my book. In short, where these concepts have been, are explained in short extensively. Past. Then in short, the first directional area, whether it's downward, comes to the step. We find ourselves in an area that I define in short as accumulation distribution. That is, it's a There are price levels, in short, where the price behaves in a certain way. In short, where it usually lingers and then perhaps there was a first rejection. Immediately on the VIX areas, on the max area, it can come to test and then immediately return down and stay there. This is an area that I consider a break at the moment when these areas do not hold and are rejected. Obviously, it falls back into the realm of a normal week of fluctuations. The price could also return to the initial range, making all the various stops on the way back. The moment these levels are broken, we find ourselves in areas that I consider to be a change of environment, meaning the environment from a trading environment, in quotes, range of a normal trading environment. We move to directional trading where prices start to become strongly directional, because perhaps there has been a break of weekly levels of the. Therefore, this does not give a greater directionality to the price. This is how I understand the market structure. Let's see in the next slide. That, in short, that chart we saw earlier, simply with the addition of the daily string. So, hasta ahí si querías. We have this one here, so we know where the price is moving and we can clearly understand how to work. Here, when you see the area here, for example, the blue one, which was the first directional area for the angle, for the weekly levels, here it already represents the break. So a change of environment. So as if we were in this situation here, okay? Because here there's a change of environment, meaning important levels are broken. And so the price takes on a much more pronounced direction to then find a new area of stabilization, higher or lower. In short, according to the two countries, it was the break. Here we have, in short, the complete picture with weekly levels or daily levels. And obviously, in short, this sort of structure that I have built for you, in short, to help you better understand how to have a clear idea of where we are with the price, where the price is located. What are the possible reactions I can expect when the price reaches these levels, which I repeat, all of them can be used. Obviously, these levels are support and resistance. It's clear with the technique we know, and that you can then find clearly in the book, in short, that we guide you on the types of entry, the fast position, range entries, directional entries. However, even if you want to exploit the simple concepts of support and resistance, you can do so in a very simple way with some patterns. There are, in short, the patterns that are then reported in the book, which are also important. So those who want to delve deeper into these topics, of course, can take the book and make use of it and study it into the details of what I am saying. However, I imagine that this is something beyond the book that can be helpful, because I imagine it can help you to frame things. I will make a PDF of this presentation here in format, PowerPoint, so that I can attach it below the video, so that you can keep it there, perhaps at your disposal, to be able to recall and build your charts with the levels, with the BC3 levels. As I showed you at the beginning, I hope that this additional brief summary video also gives you a little insight into how the levels can be used, how it is constructed, how they are, the logic with which I construct the daily and weekly levels, what their function is, because in short, with these areas that I have indicated to you, I imagine it is all quite clear which are the accumulation areas where I can expect a rebound, where I can expect the resistance. In short, it's all quite clear, even if at this moment the chart is occupied by all these writings. Obviously, you can't see it. It's not like I have it, but if you learn to keep this complete view in sight, having both levels available, it will help you in choosing your trades, because maybe you are aware of the area we are in and how the price is moving, what I can expect at those levels, in short, as a price reaction. Having said that, I thank you again for your attention. I wish you a happy weekend, and we'll talk again on Monday.